Never in the history of America ever had CPI print above 4.5 or 5% without inflation being brought down by having Fed funds not also be greater than 4.5 or 5%.
Hello guys, welcome back to Christian Finance for your regular financial content. And today we're going to be firstly taking a look at Chamath Palihapitiya's, difficult name to pronounce, points of view of what's going on in the markets, what has been going on, but more importantly, what will be going on in the short to midterm. So afterwards, I'll give you some more evidence to either back or argue against his points, as well as my own personal thoughts and views on what's going on in the markets in the US and around the world.
So this is why I think you can look at the fact that whenever there's inflation and whenever it's spiked, what has had to happen by the Fed is you have to take rates above that key 5% threshold when CPI is above 5% to break enough demand so that the economy's reset.
I mean, yeah, it's a very interesting point right there being made by Chamath, saying that based on history, once we've had inflation rate as high as we have right now, the Feds would have had to raise the interest rates to an average of about 5% in order to neutralize the already existing inflation rate. And currently, as of September 18th, we were at 2.5% in the US specifically. Obviously, now we might get another 0.75 increase in interest rates next week, and then potentially another 0.75 next month. So that still only bring us to about 4%. I personally am struggling to believe that Jerome Powell in specific is going to raise it past 4%. Obviously, depending on what happens. But yeah, I really am going to be curious if he's going to go anywhere near that 5% that Chamath is talking about, and just that optimal one based on history. I just want to quickly take a moment and ask you guys to like the video, subscribe to the channel, hit that notification button as well so you get notified every time I upload the regular financial videos. If you guys don't know, I'm actually running a giveaway. It's going to end 12 days from now. All you need to do is subscribe to the channel and comment below your favorite thing about my YouTube channel as well as your Instagram handle. And then at the end of the giveaway, I'm going to DM you. And if you're the winner, I'm going to transfer you $50 worth of Bitcoin to an address of your choosing. Once again, guys, the only thing I ask, subscribe to the channel.
I'd rather just say there are 20 or 30 things that could very much complicate the world economy.
Once again, I very much agree with what he's saying. And that is essentially that there is 20 to 30 different economical problems going on right now, which is 100% true. And the meaning of Chamath's final words there were essentially that we need to kill the beast right now, raise the interest rates now, and really kill inflation rather than the alternative, which would mean decrease interest rates, let it run up really, really high, and then later on we'll have to squish it. But all that's doing is furthering the time away of when max pain is gonna come, because trust me, having 9% inflation consistently year over year is not sustainable. So eventually it will have to be crushed. The only thing I hope that Jerome Powell and the Fed do is that they do it sooner rather than later. Now, another key factor I want to point out is that the printing actually didn't begin in 2020. It actually began in 2009 after the 2008 market crash. That is when the first form of money printing began. It's just that back then it was a lot smaller amounts. And obviously now much bigger in the trillions consistently the past 2 years, alongside the earlier ones from 2008, 2009 accumulating, right? And that is why we're having such aggressive inflation of 9% on paper, but realistically 16%. One thing I want people to keep in mind is that as bad as it is in the US right now, of realistically, let's say 16% inflation, over in Europe, they're saying 16%, 17%, but in reality, in places such as Greece and Turkey, and even where I'm from, Bulgaria, it's closer to 50, 60%, right? So over there across the pond, we're seeing 3 times more in the inflation numbers, which really is scary. Now, another person I personally really look up to in the financial space is Michael Burry. And here he actually tweeted, and yet I keep getting asked when crash. And he's just showing how we're essentially getting lower highs and lower lows, right? And here we likely will do it again. And he has another tweet where essentially in the 2000 market crash, we actually went down with a little recovery and then down again 7 times, which is something similar to what's happening right now in the S&P, right? So if we look at, let's say, the past year or the past 6 months even, which is about the same, you're going to see those lower highs. Here's actually lower as well as lower lows right over here. And here we're likely to get another one. And that just simply means that we're in a bearish trend, right? And people got excited when we had this like little rally right here. And you guys have to keep in mind that every single time we're in a downwards action, for example, there's going to be a little bit of relief up. But that still doesn't change the fact that we're in a bearish downwards action in the middle of a recession right now, as we are. And obviously Bitcoin right now is much more extreme. Example, obviously it's a much riskier asset than the S&P 500, but exact same thing, right? We had literally Bitcoin reaching 68,000 in November, right? And now it's under 20K. And as long as we're in that bearish state, you're going to keep seeing the riskier assets. So your tech stocks, your cryptos, they're going to be getting hit much harder than anything else, right? And that's an important thing to keep in mind. Just like in an upward trend, once we get back on it, we're going to be seeing the Bitcoins, the Apples, the Amazons on a much higher trajectory relative to the non-riskier assets. I just want to take this time now and give you a reminder that yes, we have a lot of problems, but just historically, every 8 to 12 years or so, there is going to be a crash, right? Or a recession. And this is just normal part of the cycle. So now is the time to not live lavishly, to really do your research on what you want to be investing in, and really try to make as much money as possible, because that money, if you're investing it at the lower times as this right now, and it may very well get lower, which in my opinion it will, you can really be getting some bargains that in 5 years, when the next peak of the following bull market is, you're going to be making multiple on that money. Now's the time to really do your research and make sure you're investing in proper stocks, companies, or even if we're talking riskier, great cryptocurrencies with history, with an amazing team. And Bitcoin is the only one I recommend to beginners and my clients. You need to do thorough research on all the rest. Even on Bitcoin, for your own sake, do a lot of research on that as well. I have plenty of videos on the channel, plenty of YouTube videos in general on it. Just remember, during recessions and tough times, this is a time that the most amount of millionaires and billionaires are made. And with that, guys, the video is over. Let me know what you think about it below. Do you agree? Do you agree with Chamath's somewhat bearish narrative? Or do you think that we're near the bottom and we're going to bounce back up pretty soon? I'd love to hear your opinion down below. Let me know other similar content in the financial space you'd like me to do next. Please subscribe to the channel. Just smash it. And as always, guys, stay diversified.